If you're losing money trading crypto futures, know that it is not just you. I have also been there. Most times, it's not because the market is against you. It is because there are key things you are unaware of. So in this video, I'm going to show you 5 real reasons most traders lose money even in a bull season, and more importantly, how to fix them. So why do traders lose money? The first one is simply no strategy. Too many traders rely solely on vibes, tweets, and signals. But if you want to win consistently, you need your own strategy. These other things should serve as a confirmation. There are so many strategies out there, and most of you already know a few strategies. So pick one and stick with it, and don't try to mix 5 different strategies. Now, before you pick a strategy, it is important to do backtesting. Lack of backtesting is a second reason most traders are not profitable. Don't just use a strategy because you were taught that strategy. You have to test out that strategy. I once paid $1,500 for mentorship at the beginning of my trading journey. My mentor was making money with a strategy that he taught me, but I was not. I later realized the reason was that he was trading NQ, Nasdaq, while I was trading Bitcoin. So his strategy worked well on NQ, but not so much for Bitcoin. Now, when doing backtesting, you have to do it properly. You have to use the premium version of TradingView because it allows you to take your chart back in time and replay it to see how well your strategy works within your trading hour. Because of course, you cannot be testing your strategy out by 2 a.m. because obviously you'll be sleeping at that time. If you look at the full chart of TradingView without the replay button, you are already seeing what has happened. So your backtest will contain errors. I have made a full video on how to navigate TradingView like a pro. I will link it in the description of this video. Again, test your strategy for each asset you want to trade. Do not test for one asset and use it across several assets because assets behave differently. If you find a strategy that gives you a 60% win rate minimum with a risk reward ratio of 2R, then you have a very good strategy. But even with this, you can still lose if you fall into the third trap, which is not sticking with your strategy. So you have done the backtest, you have the data. The question is, why aren't you sticking with your strategy? I found out 2 reasons why traders don't stick with their strategy. One is losing streak. When most traders lose 3 trades in a row, they believe the strategy is faulty, then they jump to the next strategy and the process continues. Now, let me give you a data that will help you clear this up. So here is a losing streak calculator. This is based on statistics. So statistically, if you take 100 trades and your win rate is 60%, you are bound to lose 5 trades in a row. This is by statistics. So if you know this, then you know that nothing is wrong with your strategy when you lose 3 trades in a row. It's just how trading works. The second reason why people do not follow their strategy is simply emotions. Your strategy says when condition A, B, and C are met, take the trade. So why do you take the trade when only 2 of the conditions are met? In the same way, why didn't you take the trade when conditions A, B, and C are met? Why do you doubt your strategy when you have done backtest and confirmed it? When you take a trade, 2 things can happen. It's either that trade is a win or it is a loss. But overall, because you have done backtest, we know that the win rate is 60%. When you don't take trades, probably because the previous one is a loss, or you take a trade probably because the previous one is a win, you might be missing out on your winning trades and taking more of your losing trades, which then reduces your win rates as recorded in the backtest. So again, stick to your system. Take every setup. Don't let emotions filter out your trades. Now, if you have fixed this, you can still be unprofitable if you don't address the fourth reason crypto traders are losing money, which is risk management. Risk management is so important that it is 70% of profitable futures trading. Risk management, money management, I put everything under one umbrella. How much of your capital are you risking per trade? The standard is 1 to 5%, but if you're new, maybe you should stick to 1% until you have some consistency and you have fine-tuned your strategy. Some traders talk about leverage a lot. They say don't use more than 5%, 10%, or whatever it is. But I prefer to talk about position size, because no matter the leverage, what matters is your position size. If this is your trade with a risk-reward ratio of 2R, it simply means that whatever you're willing to lose in this trade, when you lose, you will make 2 times of it when you win. The position size tells you how much you are to put into that trade to achieve this setup, irrespective of the leverage. As a matter of fact, you might need to take more leverage to meet your position size. To help with this, I built a calculator called the FS Crypto Calculator. It tells you exactly how much to enter based on your stop loss and your account size. I'll link that in the description of this video. And yes, always use stop loss. Some traders says they don't use stop loss because their stop loss gets taken, then the trade now goes their way. This sometimes happen, but if you stop using stop loss, that trade may continue going against you and you'll blow your account. Now, one way to prevent your stop loss being taken, increase your win rates, reduce your losses to at least break even, and even refine your strategy is the 5th reason crypto traders keep losing money, which is they do not journal. Journaling tracks your progress. I cannot overemphasize how important journaling is. For many traders, this is actually the only thing they need. Journaling changed the game for me. Journaling involves 2 things. One is a spreadsheet. This is where you put down the assets, you trade, the dates, the P&L, the remark, and some other things. The second one is a note to remind you why your trade went the way it went, winning trades, and to tell you why your trade is against you and what you can do to avoid it. If you need to journal for every trade you take, write it down, document it, and review it daily or minimum weekly. The good thing is that you can upload your journal into ChatGPT and it's going to give you a summary of your patterns, strengths, and weaknesses, and this generally helps to refine your strategy. Now, finally, there is quotes by Benjamin Franklin. Tell me and I forget, teach me and I may remember, involve me and I learn. That is what we do inside Afibi Crypto Club. We involve you, you learn, and you trade better. We've got a full community, strategy classes, and trade signals with a 70 to 80% win rate. If you're ready to stop losing money and start learning how to actually trade crypto futures, visit afibi.com or click the link in the description to get started. Don't forget to subscribe, drop a like, and stay tuned. On Friday, I'll show you how to grow a small account trading SUI for 7 days using this exact approach.